Good morning, folks. Just gonna wait a few minutes for everyone to pile in. I accidentally hit the streaming button when I meant to just hit the get ready to stream button, but that's okay. Oh. But let's just get going. Good morning, Predicted Trades family. Thanks for everybody tuning in. First, let's take a look at the economic calendar. Oh, yeah, we kind of did yesterday. There's not much really going on this week, but for a quick recap. Not much today. Foreign trade balance. We'll see if that really has any effect at 8:30. I'd say the big one coming this week, we do have our jobless claims and continuing jobless claims Thursday, and then Friday, CPI, as well as some University of Michigan and 5-year inflation, yada yada. But I'd say CPI is probably the big one this week. And then next week we have FOMC to look forward to on the same week as monthly OPEX. So and there wasn't that much going on this week in earnings, so I'm not really going to review that. You can always check our earnings channel in our Discord. And as always, every morning, you should go check out the stock news channel to get caught up on the news. And then definitely everybody should go check out Richie. Where did you post the, oh yeah, live trading, I think. So for anyone that hasn't checked it out yet, please go watch this video that Richie made, a recap of the trades we took yesterday. This is definitely going to be helpful for you new folks to see what we're looking at and how we manage our trades, how we look for entry, all of that. So please, everybody, go watch this video. If you're not already in our server, you should be, but if you're not already in our server, it will be the last video we posted last night. So definitely go check that out. Now let's dig in on the market. As you can see, we are dealing with a teensy little gap down. We are back below that 4101. But so far overnight, we've done a pretty good job of holding the daily 21. So we have the daily 21 and the 8 kind of creating a nice little area of support that has that we've bounced at every time we get back to it. Bounce there, bounce here. So now we're back at it. Let's see if we can get that bounce again. Funny enough, this wedge that we were in and broke out of, we are now right back in it, right as it comes to a point. So pretty simple premise. We've got this a 4-hour squeeze that we are now at the bottom of after trying to fight to get to the top. We're also at the top of a daily squeeze. And right outside that daily squeeze, well, now it's starting to come in a little bit, is the daily 50. Stepping down closer to our price action. So pretty simple premise today. Thesis. If we can hold these squeeze bottoms, hold this trend line, which is from the lows from a couple of weeks. Come on. So we are arriving at this trend line, which is kind of, which is made from the extreme lows, so it's a little sharper up. I have a secondary trend line, which was made from less extreme lows. That is a little flatter, and it's coming in right at the daily 15. So, back to the simple premise for today. We're coming down on these squeeze bottoms. At the same time, we're hitting the first trend line and our daily 21, daily 8. All right here can provide a nice bounce to fill the gap and then see continuation back up to our key levels. Should we start to give out this trend line and give out 4080, we can very easily slip down to this 4056 and the daily 15, which is at 4043 for a tap. You know, I'd say we are gapping down only a little bit compared to like how much we gapped up the previous day. And as close as we are to 4080, would not be surprised for a little dip to retest that during the cash session, maybe tag squeeze bottom, and then get going back higher. But if we cannot hold, we will dip down to the next key level, 4056, the daily 15 at 4042, and the next two key levels are basically at 4013 and 4000. Where we also do have a daily Keltner down there. That would be marking a pretty big change in trend. We got back above the daily 21. We've been settling while the daily 50 comes down closer. Kind of expecting us to hold here and try to push higher. There has been good sentiment going around in buying tech the last week or so. So, very simple. Looking for us to hold 4080, pre-market low. Squeeze bottom, head higher, get back above the daily 21, the daily 8 to fill this gap and try to revisit yesterday's highs. But very simple. The sign that we are giving out is giving out this trend line and starting to fall below 4075. That can accelerate us quickly to 4056, 4042, and further. Let's also just take a quick look at that 4-hour trend that we keep checking in on. So now that changes a little. As you can see, we've talked about this, the moving averages. I have the daily 8, I have the 8 moving average, the 21, and the 45. When we made this run up and got above the daily 21, all of the 4-hour moving averages flipped bullish. And now we've been coming back to settle and bounce at them. Settle and bounce. Now we have fallen below the blue line. And our 8 is starting to dive through. Next would be the 21 starting to dive through. So right now, at least, we are seeing the first signs of this trend changing. So we need to be prepared for that. Let's see. Looking at these extreme low trend line, we've already kind of broken through on the 4-hour. This can happen, like I was just on a 30-minute and it didn't have enough days to see this, so it can skew things. It's an annoying feature in TOS. But basically, we are starting to shift under the blue line. We have to get back above that quickly for any upside to continue. Basically meaning we have to get back over 4101 and 4108 basically. And in the first candle or so to save the trend and get going back higher. Now that we are below, the chances of that happening are getting slimmer and slimmer. So ultimately, we did kind of close way up here at 4120. This is starting to look like, now that we're below the blue, that we should short any pop or any attempt to fill the gap. Basically, we just need to recognize when trend starts to change. And I've been trying to highlight these moving averages for you folks so that we can have an early warning for when the trend is starting to change. Obviously, it will be accelerated when we give out some of these lows from last week at about 40.72, 40.75. When those give out, we should accelerate to 40.56, this other trend line. Can we drop down, hit this trend line 40.56, get back up, and keep this intact? It's possible, right? But we can also go to this 40.56, try to catch a bounce, go through it, come back and reject it, keep heading lower. So let's all be ready for a down day, getting back through previous lows and back to key levels. Let's take a look at NQ in the same light. And Q very much the same, right? It would need to hold this 460 and get back up above the blue 45 to head higher. If we pop up and keep rejecting the 45, we will take out 460 and start heading back. 12,100, very key on NQ. So we could slip down to that and come right back up. We'll have to see. Let's take a look at NQ on with all of our tools. Oh yeah, right back at this 460, which has been providing a bounce. There's even a wick right here every day, bouncing there. And now we're settling there. You know, I don't want to discount that we can open and pop, trying to fill the gap, and we could still have a good update today. But I'm also going to recognize we have been bouncing at the daily 21 and daily 8 and this key level. Now we're below the daily 21 and 8, and we're slipping this level. We're trying to settle there, but we keep dipping below it. So understand when trend is changing, be prepared for the downside today, and also be prepared for a hold, a pop to try to fill the gap. And sometimes when we go to fill the gap, it just turns into a whole move in the favor of the gap, or in the direction of the gap. So pretty pivotal point here today. We might even do a little bouncing around right at open between key levels and moving averages in an attempt to fill the gap, yada yada. But just be aware of the change in trend. The Ruddy could not stay over 1900, dumped hard at open yesterday, and so that was kind of our key sign that we could see a good down day, or at least a good down move. The Ruddy dumped while other names popped first and then came back. So hopefully, I feel like that was a great example yesterday, and why I've been saying keep an eye on the Ruddy, because it can kind of react first. So let's see as it comes down to the daily 8 if it can hold and catch a bounce right back up to 1900. Would spell. It would be nice and help the rest of the market. Should we slip through the daily 8, we will be losing these lower time frame squeezes, and we'll probably set back to the 21 or the 15, which is now caught up with the low from last week. These things are not coincident, you know. Moving averages act in such a way that they can line right back up with previous price action. It's kind of how they should work. So keep an eye on that. If we give out this 1865, we can roll right back to last week's low on the Ruddy. But if she can hold the daily 8 and get back up above 19, we can get to the daily 50 on the Ruddy today. YM. So like hopefully you guys are seeing, YM tried, I mean it's a 30-minute chart, so we had 1, 2, 3 candles where YM tried to hold up yesterday versus the Ruddy, which just dove and tried to do a little bounce but then kept diving. So keep an eye on that. With the Ruddy, back to YM. YM, same as the ES pretty much. At the bottom of a 4-hour squeeze at the daily 21 and daily 8. If we cannot hold this little zone right here with the squeeze in the daily 21, we'll likely slip down to the daily 15. If we can hold the squeeze and the 21, get back through the daily 8, fill the gap, we can get back to yesterday's high. And let's just step over and look at YM. Yep. So you can see I drew a less severe trend line from a lot of these lows where we kept bouncing or closing on these candles. We're starting to slip that yesterday and now today, right? So note it. We have to note the change in trend. The more extreme one was already definitely violated. Let's try this here. Yep, everything trend line pretty much we have broken through. So, gotta understand, change in trend. We are likely going to see some further downside this week. Keep an eye on last week's low, because we are pretty much there on YM. And giving that out will accelerate us back down to a key level, right? Come on now. Toss. There we go. In fact, you could even do a little thing like this. I'm basically just connecting a couple of lows from last week to create a zone. Should that zone give out on YM, we could see a quick acceleration right down to this 31,800 and psychological 32,000. So watch that on YM. Let's get back over. There's that zone, which pretty much spans to that 32,500. So let's see if the 21, the squeeze bottom, or this zone can cause a bounce in YM. If not, it will get back to the daily 15 and the key level below. All right, let's just move on to Apple. Apple, same thing, starting to give out 144.42, which was the low from last week. So already below last week's low. Can slip back through this big strong day that was straight up to get back to our key level below. Let's see if this little squeeze bottom here, 2-hour squeeze bottom, is enough, and this daily Keltner to allow Apple to bounce at 142, 143, and head back up through 144 on a bid to get back to 147.5. If we cannot catch that bounce, we can fall through this first Keltner and head right down to this zone that allowed us to head higher a couple weeks ago. So, Apple's going to be key. Let's see if it can hold and get back above 144.5. That would be a good sign for an actual bounce. AMD made it up, pushing on this daily squeeze till it got very thin and ran into a 2-day squeeze. Now we're coming back. Let's see if AMD can hold this, what I'm assuming is a 2-hour squeeze bottom. Yep. Might even slip outside it to hit this daily 8 to try to get back to the highs that it keeps setting the last few days. Excuse me. But if she slips the squeeze bottom, the daily 8, very likely heading back to where all of these moving averages are stacked at 98, 99, where the daily 50, daily 21, daily 15 are. Amazon, that was magically always a low price stock after the split. Let's see. Now we are pulling down to this, what I'm assuming is a 4-hour, 2-hour squeeze. where the daily 8 and daily 21 now sit. Let's see if Amazon can hold there and get a bounce. I like that these squeezes are nice and thick because it might mean that Amazon won't dive through them and can hold tech up, as opposed to Apple, which is looking kind of weak right now. So let's see if Amazon can hold 119, 118. To try to get back to 125, I guess, or yesterday's high, and the squeeze top. If we give out the 118, daily 21, these squeeze bottoms, right down to the next, right? Cat just keeps on trucking. Look at yesterday. Yuck. Just a 1 or 2 point range stuck in it. So let's see if Cat starts to fold over and give out trend line from its lows. It could likely fall right back to the daily 50 at 215. But if it can start to get through 225, can get up to 227 and 230. Facebook in a wide 4-hour squeeze as this daily squeeze gets tighter and tighter around it. And I mean, Facebook is just stuck between key levels, right? I've got a key level here at 195.32, down here at 185, 184, right? When we hit the low end of the range, they go long. And then we get near 200, they send it back. And we just keep, anytime we get above 195, they send it back. So, play the range till the range breaks. All the daily moving averages are at the top of the range, which should provide a magnet effect. So we should likely get a test of this 195 today, unless everything in market is just weak and we just roll first. But keep an eye on these key levels on Facebook. On Google, looking like it's going to open near 2300. Still has a daily 21 and 8 right below where it's about to open, so I wouldn't be surprised for a little dip to test those. But let's see if Google can keep leading tech on the upside and get back to yesterday's high. If it gives out the 21 and the daily 8, likely going right down to this 2250-ish, where the squeeze bottom and the daily 15 are. So even though we are changing trend on a lot of names, or on the market, on a lot of names, we might just slip back to our moving averages and bounce around and hold. And as long as they hold, then we don't erase the last couple of weeks and go back to lows, right? So keep an eye on that on individual names. As long as they keep holding their moving averages and bouncing, the market can catch a nice bounce. GS. Oh, how ugly. But holding the daily moving averages, looks like they're about to be opening potentially right in them. So let's see if the daily 15, daily 21 can hold it. These squeeze bottoms can send it right back up through the daily 50, 320, and a bid to get back to 325. If these squeezes give out, that first Keltner down has caught up with other recent lows, so there will be a zone of support there. Basically like 306.5 to 308. JPM. Right at the bottom of these squeezes, where it's about to open, it can dip down to the daily 50 or 21 and catch a bounce back into these squeezes to go from bottom to top. But should it give out those, it will likely head right on back. 123. 120 is pretty far, but it is marking where we broke out from. So let's see if the daily moving averages, just like everything else, can hold JPM up. Microsoft. Oh, look at that nice drop. Tag squeeze top, straight to squeeze bottom, and right back up. So Microsoft nearing that point where it took off. Let's see if they defend it again. About that 265 area, right? 264, 265. Let's see if they defend that. Hold the daily 15, hold the squeeze bottom, and head right back up. If it can't hold the daily 15, it will probably be a slow grind because we have such a thick cloud, but if it loses that 265, it will probably be a slow grind back to 260. Netflix. Not a huge interest for me. Let's see if it can try to cling to this 194 and get back in between the daily 8 and daily 21, losing 194. It will likely head on down to the daily 15 at 190. To the upside, if it can get through the 21, through 200, big levels there, it can try to get back to the squeeze top up there. NVIDIA. Like, hopefully you guys can see, we ran up, then we go sideways, then we run up to new high, then we dip back for a second, taking profit, maybe repositioning for another pop, right? So let's see if NVIDIA, just like AMD, can hold the squeeze bottom, this liquidity pocket that it's about to open in at the daily 21, daily 8. Need to see chips pop and take off, fill the gap, and get back to yesterday's highs to help the market to catch a bounce. Otherwise, if we give them out, heading right back to the 15 at about 178. And the daily, the first Keltner down on the daily, which is about 172. QQQ. Yeah, basically just sitting at all the lows from last week where it's about to open. So it needs to catch a bounce, get back and fill that gap for any upside. Otherwise, we keep slipping down to the 15. And the daily first Keltner down is catching up to 296-ish. So let's see. Rocky Roku. Not a huge interest, already below its moving averages. Gives out the lows from last week and Monday. It's likely going to fall to its daily squeeze bottom. My goodness, I don't know where all this yawning is coming from. Sorry, folks. Maybe I need to hit this coffee real quick. Shop. Pulling up on 35 and the lows from last week, which also align with the start of this drive where it settled. So let's see if Shop can hold this little consolidation range and this first Keltner down. If it can hold this 343, 340, maybe even 350 level, Shop could catch a bounce up to get back to the daily moving averages above. And the new POC that it is establishing is back above, basically filling the gap. Not that Shop has been a strong leader or anything like that, but we are pulling down on these recent lows and consolidation. Let's see if it holds right here and heads higher. If it can't and gives out, it can likely get right down to the squeeze bottom and recent low. SPX. So yesterday we talked about with the gap up. Ooh. Come on. Show me something like this. There we go. So we talked about yesterday with a little bit of a gap up. We would be opening between two gap fills, right? We had the gap down on a Friday that we never filled. And we had a gap from the previous Friday that we had never filled. So yesterday the premise was we're opening between gaps. Let's see if we go up and fill that Thursday to Friday gap down, which we did. And then we lost steam at that key level of around 146, 4165, 4170. And then we came back and filled the gap up that was created over the weekend. So filled one gap, then came back and filled the other gap and just chilled. And now, yet again, we will be gapping down ever so slightly, putting us back at the daily means, and potentially right at this gap that we didn't fill. So, just like I said, we can slip down and maybe tag a key level, like over on ES it was 4056, here on SPX. We could get through and fill this gap and actually catch a bounce and head back up. But we could also, we're dealing with a gap down. We will have the daily moving averages above us. So let's see if it tries to pop to fill the gap and test moving averages, just to reject and come back and fill this gap, where it could catch a bounce or just continue to the daily 15. And, you know, the next Keltner is down at that 4,000 psychological level. Spider. Spider. Already below. I mean, with the gap down below our zone around 410. Already starting to slip below where the daily 21 and daily 8 will be. So let's see if SPY tries to hold this little squeeze bottom, come up to attempt a gap fill, just to reject that 410 level daily moving averages and slip right on down to the daily 15 at 403. First Keltner down is catching up to 400. So definitely keep an eye on the 405s, 403s, 400 puts on SPY. If it can try to hold last week's low at about 406. Well, I guess 406.8 down to 406. If it cannot hold that, we will be heading down. If it can hold that, we could catch a bounce, get back to these daily moving averages, and fill the gap in an attempt to get back to 414. Square, not a real interest right now. Yep, I even said yesterday she's pinned between these two levels. You can play off them. Looks like if you went short off of this one, you'd be paying off well. Probably going to end up at this one today. Tesla. Tesla yesterday just very clean off of our key levels. Could not get to 740 and 737. So we go right back down through 725, rejecting it one more time before heading down to 712, 702. Basically closed right near 712, but overall these levels were very key. Now we're already below 700. So 692, last line in the sand to try and give us a bounce and get back above 700. Should 692 give out, we can accelerate pretty quickly right back to the 870. I'm sorry, 670 and then the 650 range. I also have some key levels. Yeah. Yeah, 692, 690 give out. We only have a couple around 680 and then right down to 650 on Tesla. And Vicks, last but not least. Very tight squeeze here on Vicks. It's trying to push through it pre-market. Our more seasoned members in here know this setup where it's pushing into a very thick cloud pre-market. Usually means we get a rollover. So VIX, very tight squeezes, trying to push out in pre-market, and we're back at the daily 8, daily 50, which we have been rejecting. So we should see pretty quickly out of VIX if it's actually going to try to get above this 26 and keep on trucking. Getting through 26.2 or 26.5 really is going to mark more downside in the market as VIX tries to get up to that 27 and the daily 21 at about 27.2. But if we can stay below these moving averages and fall back below 26, we can see that pop on everything in the market. So let this squeeze be the guide. 26, 25, 27, very key. If it can get above and hold and push off of 26, it's back to 27. If it keeps rejecting 26 and we roll over, it's back to 25. So hopefully this was helpful for everybody today. Whoops, that's not what I meant to do. Keep an eye on ES in this trend line. 40.56 is a very key level. Should we give out? We have not tapped 40.56 at all during these pullbacks. We have bounced above and bounced above. So even if we slip there, I am expecting a pretty decent bounce just because it'll be the first time we're testing it in all of these pullbacks, and it is a key level that has been resistance and then turned into support. So let's see what we get. And as always, keep in mind that we are potentially changing trend. So mark what really will accelerate that change in trend. On ES, yeah, you can pretty much see it. There's a nice little pocket of action that happened back here around 40.56. So should we continue this rejection of these moving averages in 41.01, we'll get right back to that 40.56. So hopefully this was helpful for everybody. Thank you for tuning in. We'll see you in chat today. If you're new and this is your first time watching us, check out our website. You can get a link to join our Discord for free, where you can start to learn our system. And yeah, we like to say, no beast, no feast. Our system, the beast system, provides amazing levels to play off on options contracts every day. Come on, Tess. I was going to give you an example, but basically we output data every day that gives you levels to play off on options contracts while you're trading. There we go. Lord. Anyway, have a good day, folks. We'll catch you again tomorrow. Thanks for